Hi, this is Jocelyn with Just Accounting. It is May 7th, 2020. Today I'm just going to go over how you need to be careful with the PPP proceeds that you get. And I wanted to show you how it may be taxable to you if the IRS continues down the guidance that they've given us. So I'm going to share my screen here, and I'm going to show you that this issue here from the IRS, N2020-32, provides guidance regarding the deductibility for federal income tax purposes of certain otherwise deductible expenses in traded business when you receive a loan pursuant to the PPP. So inside this guidance kind of gives some fairly legal language straight from the IRS that basically says if you get the loan from the PPP and it turns out that it's forgiven, you cannot deduct the expenses allotted to that. So this is additional guidance because obviously it's a very unusual circumstance. So they did come out with saying that it's kind of really hard to understand actually, but it says it clarifies that no deduction is allowed under the Internal Revenue Code for an expense that is otherwise deductible, which would be your payroll, your rent, your GE tax if you live in Hawaii here, your interest or your more utilities that the PPP will pay for, and you don't have to pay it back to them. No deduction is allowed if the payment of the expense results in the forgiveness of the covered loan. So right now, as of today, this is their guidance for how this works. Let me kind of show you how that becomes taxable if it doesn't make any sense to the normal person. It won't make that much sense. So let's say you have the PPP loan and it was completely forgiven, and you typically have let's go back to your bank account here. This is just a test one here. So let's say you have sales of your whole year. We're going to talk annual numbers. Let's say your annual numbers are $150,000. And for 2019, you have services income of $150,000. This is just very basic draft, so don't take these for yourself, but this is obviously just an example. So say you have service income of $150,000, and so you run a profit and loss, and you have a company, and you have $150,000 here. But then you had some payroll, 5,000 PPP payroll that they covered, and 1,500 PPP rent. And you had $25,000 proceeds. Let's take that out. That wouldn't be. Let's just say you just had the basic, the 6,000 right here, 5,000 plus 1,500. So at that point, you run your profit and loss, and because you're doing good accounting, you watch my other videos, you know how to run these PPP expenses separately because you have to, and this is one of the reasons why you have to run it separately. So you had 150,000 and then 6,500 of expenses. Now let's say normally you have $50,000 of rent for your offices, right? And that's rent, and that's your normal rent expense, and you have, let's say, $25,000 of payroll. So you have $25,000 of payroll. So at the end of the day, you will have 75,000 roughly in income. And so let's just run a profit and loss. So here you'll have the 150,000, but this will have you at 68,500 because your PPP payroll and your PPP rent are a separate kind of deduction. So what's going to happen is you won't be able, at the moment, the way it stands, you are not able to deduct during that 8-week period any of the costs that were forgiven on your tax return. And anybody who's been in business for any length of time knows that depending on your tax bracket will depend on how much that's going to cost you as pure profit. So at the end of the day, you had $150,000 income, and you technically paid out $68,500, but you got these two income loan forgiven, so that's $6,500. So I'm suggesting to people, what I'm going to request my clients to do at some point is to probably make a journal entry backing out the PPP in the PPP accounts so that it doesn't either come up on, under the PPP account, you'd have to do some kind of journal entry, and it's up to your bookkeeper and you to do what you need to do, but you're going to back it out either as payroll or rent, and essentially wiping out those deductions. Obviously, you're not going to run two different W-2s. You're not going to have two separate recording or accounting for your payroll. You're going to still get a W-2. So it's going to be kind of a bookkeeping nightmare to figure out which part was forgiven and which part wasn't. My suggestion for the easiest way will be wait till the 8 weeks is done, till the end of the year, back out all of the information back out all of the numbers that were forgiven. So at that point, you'll see we're back to the 75,000, which will be taxed on the 75,000 instead of 68.5. And so these are kind of smaller numbers. So if you were getting, let's say your PPP loan was $100,000, it's going to essentially wipe out any of those expenses that you did actually pay out. You don't have to claim the $100,000 as income, but you also cannot claim those expenses. So that $100,000 is going to show up on your tax return, and you're going to either bump your tax bracket up and you'll pay income and state tax on it, not GE tax. They have already come out with a statement saying GE tax will not be subjected to GE tax for the forgiveness part of the loan. And so if it's $100,000, if you're a C corporation, obviously you're at a flat fee of about 20%. So your taxes for the IRS are going to be $20,000. And that money is not going to come from nowhere. You have to go make that money to pay that tax. Because of course the PPP proceeds have to be spent entirely on the qualified expenses. You're not able to save that for the taxes. So you're going to have to go make that other money to pay the taxes for the PPP loan. I think that's what's kind of missing in people's mind. It's not free. Plus, if you made the $100,000, you probably have state tax of about an additional $10,000. So for the $100,000 that you got from the PPP, you're looking, if you were a C corporation, about $30,000 of tax. Unless you went further into debt during the year. Of course, more debt and then more expenses would eat away at that. But on a basic apples to apples, you're not going to be able to deduct the expenses that you incur from the PPP forgiven loan. If a loan is not forgiven and you have to pay back the loan. Obviously, that's a whole nother video of how loans are, we have to make income in order to pay loans back. So you're still going to pay tax on that. But this way, it's kind of a weird thing. It's not really happened before that much in the history of the IRS. But as it stands right now, they've come out with the guidance saying you cannot take those expenses. So you're going to have to account for those expenses and back them out of your profit and loss at the end of the year, which is very key for bookkeeping and for tax preparing. I will ask all my clients this, but not everybody will know probably to ask this. Congress is trying to reverse this. In my experience, I don't expect them to do that. As the director of the IRS said, this is tax 101. It's a double deduction if you get free money and then you get to deduct it. So they're going to probably fight that. We'll see. I'll have another video if they do come out saying that it's allowable.